July 22nd, 2019, and I hope you're having a good day. It's a really nice day here in London, good weather, a little bit quiet as well as people are on holiday, I guess and assume. Uh, I already had some holiday already this year. Might take something a little bit later on, but for now, I'm gonna be with you guys at least for another month or so, and then maybe in August or so I'll be off for a few days. But we'll do these every morning as we usually do. So what we're gonna do now is, as we always do here at investingcube.com, and that is to take a look at the markets. And we're gonna start out with the euro, and then sort of take a look at other markets that are interesting, or they're not interesting, but the general market overview. If you're on the homepage here, you're most welcome to say hello. And if you have any questions about the markets, then you're most welcome to put them in here. Just remember, it's just one question per person, so please make sure that you pick the one which is most important for you. Um, let's begin, and we're gonna begin just with a general little overview here. So, so these are the markets. So you can clearly see here, German DAX up with 0.5%, which is not too much though for that market. You have the U.S. Russell 2000, US 30, Nasdaq, and S&P also up with about 0.5%, which is good. And dollar yen pretty much, I would call this unchanged. Euro dollar definitely unchanged. GBP USD slightly lower, and maybe New Zealand dollar up a bit, and then crude oil. So that sort of sticks out quite a lot. 2% up, most likely due to the geopolitics over the weekend, increased tension. So that's sort of the clear thing. Probably it's gonna be what people are gonna talk about. And then you have a bit of risk on in the other markets. Now, so if we begin with euro, so over the last few weeks, I've been saying that down here around 112, people will be buying, and the market did bounce upwards as projected, then it went back down again, and bounced from these levels, and then we actually reached these levels again on the 18th. But the market really struggles to trade above 1285, which is this high here, and the price is pretty much stuck within this. So this is a tiny rectangle, tiny sort of triple bottom here, and then you have a fourth low down here. So it's rather straightforward. If we trade below 111.81, I think the market is probably going to trade a little bit lower. And then if we take out the May low, then that's when we can start to talk about more significant declines. The alternative is that we will bounce here and then just go upwards. And that's sort of my main scenario, so I'm sticking with this view. But it's definitely sort of volatility has declined far more than is good, and you need to be very careful. For my clients this morning at 7:15 a.m. London time, because I do premium webinars as well that are not on Investing Cube, and I was just showing them this, right? So this is the ATR, average true range, and the weekly ATR right now is at 122 pips per week. And I'll show you something similar here actually. A few weeks ago. So this is the average volatility. So on average, maybe, I mean, at least historically recently, volatility should be closer to 287 pip or so. At least that, I guess that will be actually not necessarily the average, maybe down here. That will be sort of the norm since 86. But now we're pretty much at the rock bottom of this, and you can see that you need to go back to February 1985 to find volatility at this low levels. And usually when you have low volatility environment, it's just a prelude of like a bigger move or more volatility ahead. So I think we will have higher volatility. It's just a waiting game now more than ever. And you need to be careful, I think, with your money and your trading. Trade what works. And if you're struggling with breakouts and stuff like that in any forex pairs, then I think it's because of this. The euro dollar is just trading sideways. So in my case, for the whole, not for the whole year, but for the last few months, I've been very reluctant to hold on to most forex positions. I still trade forex, I definitely do, but I'm not very, very sort of enthusiastic about it. Here's GBP USD, which is actually the last one I did trade. And the idea here last week was to sell because I still think Brexit is something that's gonna influence the pound. And the idea was quite straightforward. We, we broke down here, and then around 65, 24.65, I shorted, and then I shorted a tiny bit more up here. But because it went so close to my stop level, I got a bit worried actually. So because I shorted here and here, when it came back down to pretty much break even, I got out of there. I think for tiny loss. Uh, but looking at this now, because as well I was long gold, so I was long gold. So what I was making in gold, I was losing here and vice versa. So, but looking at this today, it continues to be pretty much bearish. And this is the last sort of trade idea I shared with you guys. And it's back now back here break even. I think in general, we will trade lower. And if you're not already short, I would not short where we are right now. The best entries was up here. And I'm not probably not gonna get involved here again, but I think if it does swing back up to something like so let's because this is break even, right? So let's forget about this one for now. Clean this up, this chart a bit. So let's say we turn neutral, so we sell that position, and this is what I would look for. Again, there's nothing wrong sticking with that long-term view. I think we will go down. I can't really foresee how the UK is going to be able to get away or being able to exit without any complications for their currency. So no change to the outlook here. If I wasn't short and I would like to go short, then 25.10 is probably a better spot. Dollar yen, this is starting to turn really choppy, right? So you had this inverse head and shoulders. The idea turned bullish here on the break. That did not really happen. Well, it didn't happen. And then we took out the lows instead, and we're trading lower. And we're now back into the sell zone. And I'm gonna maintain a bearish bias below 108.38, as I said before. So no change to the outlook here. But again, it's a very difficult situation, very choppy. But let's stick with the trend until proven otherwise. Gold prices, definitely a bit of a letdown. So I've been long from here, right? 208, 1408. That's the last entry. Actually, I bought here, and I bought a bit here actually. And then we had the breakout, and I actually bought a bit more on the way up here. I bought at 1432, and then I bought a little bit more with an average price of 1432, whatever. Now in a tiny bit of profit, but as you can guess, if with this position on, this one actually already covered that one, but then these positions on here, when we're trading at 1452, now cut a happy man, right? And it was looking really good. But now the whole thing, well, people sort of decided to sell on Friday, and it's a significant pullback. But we, as you can see here, we have not traded back into the old range, right? We had this pattern here. So much stuff here. I'm gonna remove this. We have this break here. Forget about this for a second. So we had this triangle pattern, right? Some people call it flag pattern. We had the break here. Very good strong days, 1, 2, and then we have this very strong correction. And I think on the weekly, it doesn't look super encouraging. It doesn't look bad, but it doesn't look very encouraging to have this sort of candle. Now this is what trading is all about in general, and there's no shortcuts. And to give you an idea, I'm still gonna stick with this idea, and I'm still gonna stick with my trading plans, because I was reviewing my data from 2014. So in 2014, I'm up with about 245%. And if I would be buying just the S&P 500 with the dividend, I would be up with, I think it was 85%. So you can see here that trading, even though this is much more, you stopped up more often, it's much more active. We're still beating the S&P with about 3 times the value or what it produced. And S&P 500 trading has not been easy over the last few years, I can tell you that. I know in December when I was back, because I was born in Sweden. So when I was back in Sweden, I spoke with friends, and they do like normal mutual fund investing, to buy some shares and stuff like that. They were all struggling because when the market was heading down in December, and we were getting all these signals we were going to have a recession and the yield curve and whatnot, a lot of people sold. So even though the market sort of now recuperated, there's very few people, well, not very few, but people that are active that are actually are fully invested at the low. They're not. It wasn't what was happening. In fact, in this presentation, we're telling everybody to go short, and I was short myself, and I made a bit of money on the Canadian stock market index being short. Uh, Key point to this though is that the market pullback, we're still about 14.14. If it goes up, it will be a terrific trade. I'm pretty much a tiny profit right now. And if it doesn't, yeah, it's gonna be a bit of a stop loss. You get hurt a little bit, not hurt because you had a decent profit, but a little bit annoyed. But then the market will give you other stuff at one point. And as I mentioned before as well, for the stock market to catch up, it's gonna take them, I think, about 7 to 10 years for them to catch up. I think it's 7 years right now. So even if you would just be long the stock market, it takes 7 years or so to catch up. I need to do the arithmetics in my head with a calculator later on, but that's what we're talking about. So what you do is you exchange the frustration of trading versus beating your average investments like with 3 times, and that's just since 2014. You can imagine how this is going to look like maybe in 10 years from now or 15 years from now. So I'm sticking to my guns. I'm sticking with my idea. There's nothing different really changed here, and it's just a significant pullback. If you look at this in the short term, it's clearly a low here, and we're clearly above that low. Then you have another low here, and then you have another low down here. It's just that this market corrected slightly more than I was projecting, and we'll see what happens. Things like this can easily take a few days to resolve. I mean, down here it took quite a few days to resolve, but as long as you're about 14.19, which is this low here, I'm going to maintain a bullish bias. Okay, these are crude oil prices. So I did an article on this on Investing Cube, and I did that last week, and I'm sticking with this. So this is crude oil prices. They're just trading sideways, and they're trading within this mega rectangle and a triangle, and it's going to continue to do this most likely for I don't know, maybe August, end of August. The triangle itself, the two trend lines will meet in September 20th. So around that, maybe mid-August or something like that, I would be surprised if we don't have some sort of a breakout. And what happens here is that now these are the levels, right? You have the actual triangle levels, but I wouldn't care too much about them. So about the horizontal support and resistance, that's what triggers people. And these are the levels now. So it's probably going to swing up a bit and then probably lower again. But what happens within the triangle is no one really knows. And it's usually wasted time trying to involve and trying to trade these. But what I do is that maybe the price will go up like this. Let me show you. So the price goes up. Let's choose another color. Let's choose red pen. So it might go up, and then might go down, and then might go up, and then might go down. And what happens here is that these now are my important levels, and this now is my important level. But this level here, eventually I can reduce it, and then I can reduce it. And this one, eventually I will be able to lift it up, and then lift it up. So suddenly, eventually, I'll have some solid support here, and maybe some solid resistance here. And it's at that point we do like that, or when we do like this. This now just needs to narrow down much more, and then eventually, when this is not an important low, and when this is not an important high, and things are much more narrower, I think at that point we can trade. But what's going to happen within there, no one really knows. It's no point even trying. That's what I think, at least. That's what my experience tells me. Okay, so this is the S&P 500, and it's definitely a bit wobbly. It's like a bit of Bambi on ice or something like that. And I actually bought down here last week, and bought pretty much at the low, went all the way up, and then went all the way down, got me out. And the way this is looking at like right now, um, it is definitely much more flat. It's much more flat like this. It even looks like a funny looking head and shoulders with the head, left and right shoulder. As you can probably guess, if we trade above this 25, 29, 58 level, we're gonna deal with a bit of a bearish market, right? So trade below that, we're probably gonna swing lower. Until we don't, until that happens though, I'm gonna maintain a bullish bias. So remain bullish, no change to the outlook. Just need to stay firm here and see what happens over the next few days and weeks. As for the German DAX, it's up a bit and it's not really trading much lower. You had a head and shoulders with the head, left, right shoulder, and that neckline did not really trigger. Not that I wanted to sell on this anyway. Here as well, we have a bit of convergence, and overall, I mean, it's not a secret that the market is trading upwards, right? So I would like to maintain a bullish bias, but we need to take out 12,462 before this becomes really interesting. The alternative is that if you're really bullish, then maybe you can put some fibs on this, like this, and then maybe at lower levels, like the way this is sort of moves down a lot, I think the best idea would be 11,836.9. So around this, the fourth fib, I think this would be a better option. And that's quite a significant decline. That's like a 3.72 percent decline from today's levels. And that's pretty much it. So these are the main markets. Let's see now if you guys have any questions or any good mornings. So we have Vasilios, good morning to you, sir. And we have Scarf B, good morning. And we have Marvin as well. Marvin, I hope you're doing well. Thanks so much for all the likes. Everybody here, I hope you guys having a good weekend. I don't know if you trade shares. If you trade shares or slightly interested about it, we have a new report, a new Facebook report released by Nicholas, and talks a bit about what's going on. So even if you're curious about, you know, this platform that most people use, I think yeah, about 2.1 billion of people are using either Facebook, WhatsApp, Instagram, or Messenger every month, no, every day. If you're curious about that company, a little bit how they're making money and how they're trying to make money going forward, download the report. You just need to log in. You can find it up here as well. Actually, this is interesting. Yes, you can only find it here. You can't find it here actually, under shares. So you find it up here, but you'll find also other stuff that are free as well. Everything is free really. Otherwise, it's down here. And so I don't know if you noticed this, but we have a new Twitter feed. Not a new Twitter feed. It's the same Twitter feed we launched like a month ago, but this could be a good little way of keeping track of things. So if you don't actually want to, if you're not, you don't want to, if you're not visiting the website too often, you can just check out the, you can just check out that Twitter feed as well. You're in the webinar section. So lo and behold, we actually managed to update the section here. So when you're done here, you can just scroll down and you'll find our analysis down here. So you can just scroll. It's not everything is not perfect yet, but when you scroll down, it loads a new article. Because I'm broadcasting from the same computer, it actually takes a bit of time. Yeah, so check this out. Okay, it looks like we don't have any questions, so I think we're gonna wrap things up. So you have the link there for the Investing Cube account, and if you have any questions, let me know, and I'll see you guys tomorrow, same time here at investingcube.com and ATFX channel. Have a good day. Thank you, and bye.